What's going on, traders? Hope everybody's having a great weekend and a great month of March. My name is Shark. Thank you so much for joining me. Want to do something a little bit different this week. We're going to go over the ETFs of SPY and QQQ. Normally, of course, we focus on the futures markets with ES and the NQ, but I'm going to change it up here. Just going to be taking a look at some weekly levels, where we're at right now, and some daily levels, and also going to take a peek at some of the other outside data points that I like to look at each and every week to help me gain a little bit of bias and extra insight from the markets for the upcoming week. But we're going to start off, as always, here with the economic calendar, see if there's anything we want to be aware of coming up this week for our trading. All right, so let's get into it here. And let's see here. Tuesday, nothing really interesting. Monday, nothing really interesting. Wednesday, we have PPI at 8:30 coming out, so that will definitely be worth keeping an eye on. And then Wednesday, once again, later on in the day, 2 o'clock, we have the FOMC interest rate decision coming out. And as always, Monsieur Powell will be speaking at 2:30, one of the last speeches we will be getting from him. So I certainly, of course, will be tuning into that and watching and listening closely. Let me know what you guys think in the comments. Purple tie, blue tie, what about a brown tie? What do we got this week for Powell's press conference? All right, Thursday, March 19th. Initial jobless claims at 8:30. Be paying attention to that as well. But nothing really going on after that. Friday, the 20th, we don't really have anything here on the calendar. So, looks like we are clear on that front. So, it really looks like Wednesday is the big day that we all should be aware of. Watch out for some potential chop on Tuesday, the 17th, kind of affecting the markets with some potential hesitation coming into FOMC. All right, so let's get into the charts here. Let's look at the S&P 500. We usually start off with ES, so we'll start off here on SPY this week and just taking a look. And overall, we've talked about this at the start of the month, right? We had this balanced price range for a while, and now we finally took the first break of structure that I've been waiting for to really happen here. And we're taking a look at the weekly chart. And first thing really that jumps out at me is we did close below the weekly 20 and 9 period moving average here on the weekly chart. Kind of came up right into this 3-year weekly VPOC, could not get over that. VPOC right now is sitting at 684.80 or 81 actually. I just round to the nearest 5 or 0 most times. With that said, here we are. We've broken this balance, right? We were watching this. This was the area that was really, concerning for me, or a lot of traders don't like this, right? We're not making and displacing, making a new higher high or a new lower low. So we're waiting for that to happen. And finally, we did actually see that play out here. Now getting below these equal lows here from the week of the 19th back in January and the week of the 16th here in February. So we've broken those lows, and that's around 675.45. So as long as we don't see some daily closes up above that level, the bulls are definitely in a bit of trouble with that edge to the sellers. And now we're at the next critical juncture here for the bulls if they hope to be able to keep the market afloat, right? Another thing that I'm kind of noticing here, well, actually two things, is one, we've kind of got this sell side curve coming up, right? You see this rounded top. The other thing is, what is this potentially creating right here within these 4 weeks of basically a month of candle structure, right? Let's see. Now this might start to make more sense if you stand on your head. But what do we have here? I'm gonna make the little circle for the opening. You can see I went to art school, of course. To me, this looks like an inverted cup and handle, and here's all the liquid falling out. Will the market follow suit? But looks like an inverted cup and handle to me here on the weekly as well, if you're into that chart pattern kind of thing. So now 661. That's pretty much what I'll be watching for the next critical area, about $1 or so, a little bit more than $1 lower. If we start to accept and break under that, well, for me, the next target I'm going to be looking for is to attack the weekly lows here from back in November, mid-November, November 17th. So right down here, I'm going to be looking at as a potential target if we do start to break and accept under that 661. Gonna throw this level out here and a little bit lower. I can't see it because it put it all right close enough. And you know what we'll do? We'll make it a dashed line. So that way you can kind of differentiate it. Ooh. If it would drop down. Boom. Should switch. And let's actually try to get that number precisely. 650.85. All right, so I was pretty close there. I'm gonna call it 650.50. I have 650.62, but if you want the accurate one, 650.85. There you go. That's the next downside target I will be looking at for the sellers if in fact we do find that acceptance underneath 661. Okay, so let's take a look at the daily chart now, see what we can take away from that perspective. And let's get in a 3-year daily here. Boom. Okay, and what is interesting here to me, what I'm jumping out at the screen, we've got the 200 period moving average, the SMA right here sitting at, what is this, 658.60, right? So pretty much just a little bit below that key macro level that we just identified at that 661. What I would be potentially also looking out for is a sweep of this big level and then coming into the 200 and then actually going and bouncing right there and faking some people out, rating some stop losses, and then recapturing that critical macro level, and then we can see what happens from there. So that is just one scenario that I could be watching out for as well. But if they do certainly get below that 200, that's really when things start to get interesting, and I'd be pretty confident if we start seeing those closes under the 200 that we are going to head lower down to this next big area. You can see it right here as well, a little bit clearer on the daily chart from where that is, and that's really from the low of the 21st of November. So that is interesting to see that confluence here. We are starting to get, we're not quite there yet, but starting to get a little overbought, oversold here on the daily. Haven't seen that in a while. I should have looked on the weekly, but I did not take a look where that is. Why don't we just pop back there really quickly, or we could look at it on the Qs. I'm sure it's not going to be that much different. Just be interested to see. All right, so we're right at the 0 line. Okay, so interesting there, coming out of that overbought positioning. I'm sure the monthly hasn't really budged too much, but we'll give it another couple of weeks until we take a look at that. But let's flip back to the daily chart here, and then we'll just run on to the hourly, just as an exercise really quickly. But no, it's not going to be really real official course levels, but I'll take a look at what we can see from an hourly perspective. But here, yeah, we certainly can see again handle kind of that cup, right? And this is our next level. What do I think if we could break under that, right? Let's see here. get zoomed in a little bit. Moving along, come on. Okay, a couple of definitely interesting spots. I mean, right below 664, 665. I'm looking at these highs right here, so it's not that much lower as the next area I'd potentially be interested in what happens with the bulls. But let's look at these highs, and really this is where supply and demand really kind of comes in for me. So let's bring it right here. Can also bring that as a dashed, just for the visual sake. There we come in. Boom. So there's our zone. 650, I'm going to call it 650.50 and 646.35. So there's a supply area. Could come down to the second part of that, excuse me, not supply, demand. But those are kind of anywhere in between this area is what I'll be looking at personally here for some downside. All right, let's flip over to an hourly chart and see if we can take away anything from any swing highs, swing lows over the last couple of days. Why don't we do 10 days? Gosh, that VWAP really looks ugly on there. On the hourly. Okay, I think this area right here, definitely interesting to me. The 683, you can see these equal highs. And what I'd like to do is that one's not the most immediate. I think I'm going to be looking at these lows right here. Okay, you can see these two equal lows. Boom, boom. And then we did get just a little bit below them here in the overnight. But I think that this spot really is what I will be also paying attention to. This were the day lows. I'm going to go with these. Okay, 669.55, we're going to call it. See if the bulls can get up and back and recapture that. And I think that would be a step in the right direction. We also have the 200 lining up with the confluence here at that 675.45 area with VPOC and the 200-day moving average right there. So that is interesting, and that is one of those macro levels, the 675.45. So that's also interesting to me as well. Now, if we break Friday session lows here at the 661, we'll call it, and then I'll be looking back towards the lows from, I believe this is the Sunday gap down. I think this is when this NQ bounced. This was, I think, 27,400, if I remember correctly, on the Nasty Nas. but this would be the next target that I'd be looking for. This overnight low right here. We'll do that in a shorter dashed line for us. Boom. And we'll change this one, just so that way we know they are intraday levels. Beautiful. Okay. And that's pretty much the main things I'm going to be watching. This will give me a bit of a bullish bias if we get over intraday, at least over that 69.55 area. Definitely bearish underneath Friday's lows, and then see if we can get target down the weekly low from last week in the overnight, that gap down on Sunday. So let's see about that. A lot of geopolitical tensions, of course, as well. So one tweet, one headline can obviously change things a lot overall, and Trump is definitely having a lot of fun with the posts on True Social and the like. So I'm also going to duplicate this intraday level. Move it. Bring it up into this area. Actually, there's just been a lot of damage done here on the hourly. And bring it down just a little bit. Right here. 681.75 we're going to call it, which is actually lining up there with the value area high here on the 10-day hourly chart. So that is interesting. So I'll definitely say up and over, especially the Thursday session high, Friday session high, of course we have to get over, but really up and over 675. 50, 45, that's going to give me more confidence, and we probably will head up into the 681.77 area here at value area high. So that's what I'll be watching there for the SPY, the S&P 500. All right, so let's pop over to the Qs and see what we can take away from the tech sector here. Let's get on a weekly chart. Okay. Here we are on the Qs. Weekly chart, 3-year weekly. Gosh, VPOC is a lot further down now. What is interesting here to me, and one thing actually now that I'm thinking back at it, because when we were looking at the weekly 3-year chart on the SPY, the VPOC was right up, and that's where we rejected, right? With that, just from the price chart, the VPOC was up here, kind of leading me to believe that we were seeing some distribution there in the market overall. And that's what, of course, we were wondering what was happening, if this was just distribution or a potential reaccumulation until we started really breaking down here. You certainly could have made the argument for some type of a bull flag setting up, but it seems to be looking uglier and uglier by the day. And again, here, same thing as on SPY, we did close below that weekly 9 and 20. The weekly 20 sitting at 605.40, weekly 9 sitting at 606.30, 330. But for me, structurally speaking, unless the bulls are able, well, first step, they need to get back over 600, the 625 thereabouts, right? I want to see them recapture the lows here from the week of, what is this, last year, December 15th. Want to see that recapture. We did have a couple of equal lows here as well. So, we can say, I could throw in one more level right here, really that, because I believe they are, as a matter of fact, pretty equal. We might have made a very, very marginal lower low. But the bulls, again, they need to recapture 625, but really they are vulnerable unless they get back over 614.55. If they can get back over right here, then we can look to trade back to the top part of the range at the 630s once again. But unless they do that, no good for the bulls. And certainly if we stay below that 600 level, no good for the bulls. Same situation here, looking for that last weekly low. And right here, the week of the 17th, that's where I believe we might be heading, especially if we stay below that 600 level. So going to be watching that very closely. Let's mark it off right here. And a matter of fact, this one lines up a bit cleaner with really where I'd be looking for the next potential bidders to come in. Let's do it in the longer dashed. Boom. There we go. So real close to 580 basically is the next area I'll be watching, and I don't think I got it. I think it might be a little bit further away. At what is this? 580.75. So a little bit higher, as a matter of fact. And that's a little bit too far away. So let me move that one actually up. Just a little bit. Why does it not seem like... Oh, that's what it says. 680.74. All right, so I can do that. Excuse me, that 580.50. That's fine for me. 25 cents away, but that gives us a little bit extra room. I actually kind of like to go a little bit lower because that kind of gives us a little bit extra confirmation. But right here, same spot though. You can see we touched, right? So we had a bit of a structure build right here. This candle, this weekly candle, the week of September 9th, broke that structure. So this is the next area that's going to be really key for the bulls to be able to come in and hold. If we are in fact able to break it, let's throw in and actually do this easier. We can just duplicate. Right, if the selling really is strong, then we will look towards the lower part of that little balance range. You can see the equal lows pretty much there for 3 weeks. 1, 2, 3. That's 585. We'll just call it 558. See how close I am. 560, 558, 558. Okay, so yeah, 558.75, right around in that area. That would be the next spot I'll be looking for, but I will say we can, and actually we're going to make one more macro level here. This one actually probably would be better to get on the daily. But I will say under 580, 45, then 569, 25, thereabouts. We're going to flip over to the daily here. Maybe we can get a little bit closer on that. But if we do get below that, we'll just say below 569, then I could drop another $2 or so down to that 558. Let's take a look at the daily chart. See if we can't suss out any more of these macro downside targets. Okay, similar situation here for the Qs. We were just talking about this on, now we're on a 3-year daily chart. And what do we have? Just like the S&Ps, we do have the 200 period SMA right here at 591. So watch out for that as well as a possible area where we could find some support for the bulls. Of course, the bigger institutions are going to be watching that 200 like a hawk. If you think they really care about a daily 9 or a daily 20, not so much. But do they care about the 100 SMA or the 200 SMA because these guys deal in longer time frames for their trades? Absolutely. So they will certainly be watching this as kind of a last line of defense for the bulls. So watch out right there. But now we are on the 3-year hourly. And maybe this is where, because actually this would make more sense. Maybe this was what I was looking at on SPY, and it wasn't the weekly, because this actually does line up. So this makes more sense that I was wrong on that. But as far as the distribution being on the weekly, but we are seeing it here. VPOC, a lot of volume, a lot of traffic up here as we were balancing. Definitely seems like distribution to me taking place. And now we're obviously seeing that sell with the help of the geopolitical tensions coming in with Iran. So let's watch that 200, but now we have some downside targets, I think, that are pretty good. And if we do happen to break underneath at 558, I mean, we could come back down. Look back into the start of August, right? This daily low right here. Come down into the 550s, the mid 550s, 551. But we're not there yet. So we'll certainly update if we get a little bit closer down into that zone. But huge coming into the 200 here. That is big. So let's see what happens with that. All right, let's shoot over to an hourly chart really quickly. Why don't we do a 30-minute for this one? Because that VWAP was killing me on the hourly. Okay. Boom. All right, so let's mark off. First, we're going to do that Friday low. And I can already see here it's pretty much matching very close to the lows from back earlier. What is this? This is 2 weeks ago. So this is very interesting here. Not only if we do get below this spot, not only are we breaking the Friday session low, but we're breaking this low as well, which is not good. So 550, what is this? 591. We'll call it 591.95. Break under that. Oh gosh. Now we could do a little sweep. It was pretty much the low right here as well, so definitely be cognizant. You can see the wicks right here, so be cognizant of that. But if we really find, say, an hourly acceptance, 4-hour acceptance, something like this, well, then we're going to start be looking at the same thing. Let me actually just switch this over and get us into our smaller pivots. But you know what I'm going to say? We're going to go ahead and same thing as the SPOOs. Look for the S&P. Sorry, it's not futures. Just like the SPY, we're going to be looking for those Friday lows, right? And when this changes over, I'm just going to duplicate it and write it down there. And then we're starting to get close to those macro levels. 580s just underneath 580 half. So duplicate that. Boom. Okay, and let's duplicate another one and get it for another pivot for us. Right here. And this is pretty much where we couldn't get over. I think this is that 24 for the NQ. This area here was pretty much that 24,700, 24,715 area where we just could not break over. And then finally we did collapse. Same spot. So that's 595.80, 595.75, thereabouts. Take it as you wish, but that is the zone I'll be watching very, very closely. If the bulls can start to get over that 595, 596, okay, well then we can look for a little bit more upside for them. Maybe we get a 50% retracement of a Friday's range. And I'm trying to see, we closed here, and I mean, the 50%, I wonder if it takes us into the lows from the Thursday session. And I'm wondering if that's about 50% of the range. It looks like it is. I'm going to try to zoom in here. Come on, Sally. I'm afraid to press zoom because it hasn't done it, and then it's going to zoom me in extra. Let's just see what happens. Oh, it did it. Zoom me in extra. That's what I didn't want. That's fine. And we do have VWAP actually just above that key area as well, which is kind of interesting. But 50% retracement, yeah, it's pretty much right there. So, okay, I like that. So, if in fact we are able to get over 595, I'm still going to call it 596, duplicate, see if we really can't come into that base of Thursday, and that is about half. That's about half gap on the Friday session. And that area is 597.68, but I'm going to call it 75. 597.75, 597.70, right there. Just look for that little base here around 11 o'clock before we saw that rally, and you should be able to find it. But we can see how it reacts. VWAP will probably switch a little bit, but the key thing for the bulls is over that 595.80, and then we can go ahead and trade up into that next area. We start to get over that. Oh, then we've got that macro level right around that 600, 630 area, potential short zone there. And I certainly like that idea. You could even potentially, if you wanted to put a zone, a little supply zone right here at these wick highs, you could do that as well. And brings it around, what is it, 601.77, thereabouts. But that's, we'll see what happens if they're able to get over. But I think we have some decent pivots here for us to be able to work over for this upcoming week, and we'll see what happens. Certainly over the 597.75, we can look to trade up into that 600, and then maybe we make it all the way back up into the Friday sessions highs. That would be my next guess if they are able to capture and find acceptance back in We are outside of the value area, though. You can see value area lows right now, at least on this 10-day, 30-minute chart, 599.13. So maybe we do need to see some, moves back within the profile. But Globex will open on Sunday, and we'll see where we're at. So far, the Globex opens have been ugly, but we'll see what happens when that comes to us. All right, let's go over and take a look at some of the other points here. All right, we'll just start right where we are. Why not? Here we're going to look at the SPX A50R. This tells me how many stocks in the S&P are trading over their 50-period moving average, and we have that 50% as our threshold line, and we are below that right now. Only 31% of the stocks are trading over their 50-period moving average. Not so pretty, but we are coming down into this 28% area. I would be more thinking that we see some type of a push. We didn't get down to the 20. When we were in the 28s, I start to get a bit that contrarian point of view. Not quite there yet, but I still wouldn't be surprised to see at least some type of a bounce potentially up maybe into the 40% realm before we head back down and then go ahead and test that. But with that being said, breadth is definitely turned more bearish now, being underneath that 50% marker. And you can see also here just down, I have the S&P here, or the SPX pulled up, and you can see that we do definitely have a break of a trend line going on right now. I'm trying to zoom in here on the bottom so you can see it a little bit more clearly, but finally this ascending wedge is finally starting to play out, and now we've broken down. So at least on the SPX, I mean, this equal low from down here is looking very interesting. 65.20s, very possible here for the SPX, but I think we'll be due for a little bit of a bounce on Monday. That seems right for me, but we'll see what happens. All right, new highs versus new lows. What do you think? We're down negative 115. Oh, okay, not that bad. So we are below the zero line, but not really that bad. Negative 64. Okay, but as long as it's below the zero line, we use that as our gauge. So new highs versus no lows. Another breath signal there saying, watch out, getting a little bit weaker overall. All right, let's take a look at the junk bonds. I believe TNX really has been ripping. I thought we were going to see it cool off a little bit, but it is the bonds. It is this uncertainty with the geopolitical environment right now that's just crushing the bonds. So no divergence though. This little bounce towards the end of the day, I mean, this is on an hourly. Yeah, it's just a slight divergence, but nothing really for me to get too excited about. But the slight uptick there might come into that favor of a bounce a little bit on Monday. Let's take a look at the bonds, each one of them really quickly. They're all probably getting destroyed. Now, I will say the short term of these bonds are doing a bit better than the longer end, and you can see that reflected here in our shortest, with the shortest duration bond with the SHY being basically flat, but nevertheless green, where we have the TLT and the mid term bond here. I think this is the 7 to 10 year, is also down just marginally as well, but did break this balance here. No good for that. The TLT did not hold 88.40. No good for that. Coming back down into the 86. Got a hold here. Okay, if this recaptures, maybe we get a little bit of a retest up into 88, and then we come back down. But not looking good there for the bonds overall. Let's take a look at the credit spreads. Probably still saying risk on or risk off. Yep, right here, still above the 50. Okay, bearish here, risk off for these two. moving up higher, and bond ratios here. Oh, okay, this is not good for the bonds. Getting back over the 50 period moving average here. This is all saying, at least for now, as long as it holds over this 50, that TNX. And what may happen is that we get a bounce in the market, right? Bonds bounce as well. This comes back down, retests the 50. Each one of these retests the 50, and then they head back up, and the bonds then continue to collapse. So that is, this is not a very favorable environment here. And sometimes the market, we get an inverse relationship between the TNX and the bonds, and sometimes the bonds are going up in a flight to safety, and that actually ends up being bearish, as well. But in this case, the yields are going up, and this is where we are kind of, I'm trying to remember what was this back in 2024. It seems like to me that we're in this regime where the TNX going up is putting pressure on the markets, whereas for a little bit we had a flip, and TNX going up was actually helping the market. So it just kind of depends on what's going on, from a broader perspective. But in this case, this is very much reminding me of where we're back into bonds down, the market falls, and that TNX going up is putting pressure on the markets once again. Okay, moving along. Let's take a look at TNX and oh god. Okay, so right dip below here on TNX, the 38.80, kind of an inverted head and shoulders, right? If we said 40, 41, 4.1 was the neckline, boom, boom, broke over, now over 42. Oof, okay, as long as this stands over 4.2, it's an issue. So what might happen here, we come back in, the bonds bounce a little bit, we come back into 4.2, then this heads back up, either to match these equal highs from here, but all things being equal, I would say 4.3 is probably coming up on the TNX on the yield once again. And okay, Trump administration is not liking this. They want a weaker dollar overall. And look at this, the dollar is just screaming right now. Now, at least on the 4-hour, we are overbought. So we're coming right into that $100.60, right? You can see I have this level right here kind of stopping, but couldn't find any pressure below the 98.61 and broke up over the 99, came into the next pivot at 100, broke over that. I mean, as long as we stay over 100, I don't really see much trouble here with the dollar. I would think this would probably reject, maybe pull back into the 100. It might come back down now and retest these highs. I don't have a level here, but it's very possible. And maybe I should put something here because it pretty much actually ended up being the equal high. So this area does seem important, right around 99.75. But if we came down to 99.40, we still have to consider it a higher low being put in. The markets could either do this or it could do this. Now, whether it breaks there, obviously we don't know. So it could go and then fail. Try again and fail. And then come down like that. Right? So we want to see under 99.40. This is all geopolitical. And this is obviously usually when the dollar's going up as well. That also puts pressure on the market. So this is not what we really want to see, and a little worrisome with the dollar heading up. And again, come back more into that. I think it was that 2024 environment where the dollar was just ripping and screaming, and it was putting a lot of pressure on the markets. And it seems like we are back once again. Do-do-do. Haven't taken a look at transports in a minute. I doubt there's, let's see if there's any divergences going on, which I don't think so. Okay, the Dow's already at, the Dow cash is already at the 200 period moving average, and they're pretty much in lockstep, so no real divergence there. Dow is definitely, look at the Dow cash is definitely overbought here on the daily, or oversold, so that's interesting. That could go to our Monday bounce, Monday, Tuesday bounce, maybe Monday bounce, Tuesday chop, and then Wednesday we see the FOMC. Take a look at the dollar and gold. Critical spot really here on the dollar. Starting to break out of this, what is this, 6-7 months balanced price range. Oh, gold was looking so pretty. Need to see it back over 51.16. Okay, so far, it's not looking too good. Back below the 9 and the 20, back below that pivot. I don't like that. It looks like gold's gonna potentially be whole coming down, and that's no good. Dollar strength, of course, they have an inverse correlation, so dollar strength is also going to be pushing on gold as well. We could see 48.50s again, to be honest, on the dollar. On gold, maybe down to these lows from the 17th or 18th once again. No good, but breaking out of this balance range on the dollar is no one. Let's see here. Okay, let's take a look at put call ratio really quickly because we might be starting to get some contrarian signals here. Let's see what it looks like. No, not yet. We're still in the range. Not there. Okay. Nothing too extreme there. I believe the skew probably is going up with some probably people getting longer dated puts. Let's see. Oh, no. Couldn't get up and over. Okay, was wrong there. Inverted ZT going up. Less likely of a rate cut with this going up. Probably because of oil. Let's look at that oil volatility. So I'm sure that will be interesting. Oh, wow. Okay, so as long as we just stay above 100, oil really can keep on trucking. I mean, even if it comes back to 72, we can still just find a bounce there as well. So, but getting a bit extended, I really wouldn't be surprised to see a bit of a cool back, everything being equal, but with Iran and everything, this might probably stay elevated. Let's just finish this off with taking a quick look at VIX. Okay, still above 105. We're still above 107 on VVIX. Volatility of the volatility. Okay, let's pop over to our regular VIX really quickly. Starting to get a little, not yet completely overbought. Came down close to that 2480 and then bounced. We're really going to need up and over 28 and 30 here for the next leg. That next leg into the 30s would really be that next higher high. So we'll see if that happens, but nothing saying that volatility is going to cool off quite yet. We'll watch this on the daily to see how overbought, oversold it gets. VIX 1 day, I guess the 31.25. That'll be where we watch. If we get over that, watch out. Probably pop up higher into the 36s, 35 maybe. right to that last swing high. Still in backwardation. I just have to double check. Actually, this might be the. I have to see if this VIX contract expired. It may have, but I'm sure that even with the new spread, that we're probably still in backwardation right now. This is not favorable look, being in backwardation for asset managers, funds to be allocating more money into the market. They won't be doing anything, any big moves with the VIX curve like this. So, all right, guys. Well, that's all I have for this week. If you enjoyed the video, don't forget, like, subscribe, comment down below. We really appreciate that so much. Again, my name is Shark. Thank you so much for joining me on this week's version of market analysis and update. Remember, a prepared trader is a profitable trader, so let's all plan our trades and trade our plans. Again, thank you so much for joining me here on the weekend for a little prep. Wishing each and every one of you a successful and great trading week and rest of the month. All right, guys, take care.